This is the first of a couple of different classes that we put together for the next week or so. We'll probably be adding some more after that. I think the bulk of you came from either Facebook post that TJ did or a Facebook post that I did. So for the really, there's not a whole lot of advertising we did for these beyond that. And so the response was pretty overwhelming a little bit. We are happy with that. The classes next week, there's one on Monday morning that will cover some employment law issues, unemployment, retirement account things. Another attorney from our office, Brian Peterson, will be covering that. And then next Wednesday morning will be an estate planning aspect of things to be aware of that are driven by the current crisis and just things to think about. So as we add more, we'll let you know. This one today focuses specifically on the small business aspects, primarily of the CARES Act that was just passed and signed this afternoon, but I'll also cover a couple of other things. We're trying to keep these classes to about a half hour total so that we don't waste a whole bunch of everybody's time, but we try and pack as much information into that as we can. So I will be going through as much as I can. We will have a little bit of time at the end for some general questions if people do have questions. I do have a little disclaimer that I have to give at the beginning that the information we're giving here is for informational purposes only. We're not providing legal advice about any specific situation. It's just general comments about the current status of the law and the things that apply to those, whatever the topic is each week. So the small businesses today. We are not creating any sort of attorney-client relationship as a result of this. If you do have specific questions about your companies or your situations, please call our office. We have plenty of attorneys available that can help answer some of those specific questions. So there is a little, I would call it a handout, but I can't really hand it to any of you, so we're calling it a send out that you'll be receiving at some point here pretty quickly from Kyla, the one that you send all the emails to. She'll email that to you. So it's just a kind of a quick little bullet point summary of most of what I'm covering today. The CARES Act, for anybody that really wants to get online and read the whole thing, it's 800 pages or so, so I don't imagine there's many of you. But if you do, it's technically known as HR 748. So it's a statute that started in the House passed it, gets over to the Senate. The Senate essentially completely rewrote the entire bill, called it an amendment, and then sent it back to the House. And what the House did this morning is concurred in the amendment that the Senate passed. So if you want to look it up, just do a Google search for HR 748, and it'll pop up right there. The biggest piece of the CARE Act for purposes of today is the small business interruption loans. It's the very first section of the Act, section 1101, and then continues through about 1115 or so. The Act is effective immediately, so there's no future effective date for most of these provisions, but it's something that kicks in right away. So the first part of that Act, the business interruption loans, these are the loans that go for small businesses, which that Act defines as any business, including a nonprofit, including a sole proprietorship that has less than 500 employees per location. So if you're a business that's got multiple locations, as a whole, you might have more than 500 employees, but if it's less than 500 per location, you would still qualify as a small business. And those business owners have to certify that the uncertainty of current economic conditions are making a loan necessary in order to support your ongoing operations. So practically, that means when you do the application with whatever bank you're working with, there will be some certification that they have the owner attest to that says, yeah, I'm in that situation. Essentially, other than that certification and the fact that you have to have been in business on February 15th of this year and had employees on that date, other than those things, you should qualify for the loan altogether. There is a maximum amount that you can apply for, or that will be granted to you under the statute. It's the lesser of either $10 million or 2.5 times the average total payments for payroll costs on an annualized monthly basis. So basically, you take the last year before the time period you apply for the loan, figure out what your payroll costs were, and then multiply that by 2.5, and that's the amount of the loan you can seek, or $10 million if 10 million is less than what you would be seeking. So the big question is, okay, what's payroll costs? What does that actually mean? Salary, wage, commissions, cash tips that were paid to people during that time period, any vacation, sick, or severance pay that was paid during that time period, any healthcare benefits, including premiums that the company paid, qualify as payroll costs, any retirement benefits that the company paid. So the company matching 401k contributions, for instance, those would count in the calculation. Any state or local taxes paid on employees' compensation. So the income tax that the company pays, as opposed to what the individual pays. And any sole proprietor compensation, the compensation that you're paying yourself. There are some limits to what gets included in payroll costs. It does not include compensation for any employee in excess of $100,000 per year. So basically, the highly paid employees, you have to prorate what their income was and reduce it down to that $100,000 level. Any federal taxes paid by the company on compensation for employees don't get counted in that calculation. Secondly, any compensation to employees who reside outside the United States, that just don't count at all. And then lastly, if the company received a loan under what's known as the Phase 2 bill, or also called the Family First Coronavirus Response Act. This was the act that was passed a couple weeks back by Congress. Any employees that were paid pursuant to that statute, that income to them doesn't get included in the calculation. So once you've worked out what those payroll costs are, add all that up, multiply it by 2.5, that's the amount of the loan that you would otherwise qualify for. The big piece of this small business issue for these Phase 3 loans or CARES Act loans is the forgivability of the loan. So provided you use the loan proceeds for very specific purposes during the applicable period, which is essentially the first part of March through the end of June, then the loan is forgiven. You don't have to repay it at all. It's essentially treated as a grant from the SBA. The allowable uses, things you can use those funds for. All those payroll costs we just talked about qualify as allowable uses. So if you're paying payroll, you're paying those taxes, you're paying the group health insurance, those sorts of things, those qualify as allowable uses. Interest that the company pays on a mortgage payment is an allowable use, not a principal payment on the mortgage, but the interest that's paid. A rent or a lease payment qualifies as an allowable use, provided the lease was in place prior to February 15th of this year. Utility payments that the company pays, so gas, electric, water, transportation, telephone expenses, or internet access, those all qualify as allowable uses. And then interest on any other debt obligation that was in place prior to the loan also qualifies as an allowable use. But again, on those loans and the mortgages, there's no principal that you can use the funds for, but paying the interest payments is fine. So as long as you use the funds for those purposes prior to the end of June, then they're eligible for forgiveness by the SBA or by the lender, who then turns to the SBA. So the company will have to certify to the lender that provided the funds that all of those things were in place. You'll have to provide like payroll tax filings that you filed with the state and the federal to show what the payroll was actually paid, invoices and receipts for rent payments, that sort of thing. You have to document what you used the funds for. But provided you use those funds for those allowable uses, then they're all subject to actual forgiveness. Whatever amount of the loan is forgiven is treated as canceled indebtedness for tax purposes, but is not included in your gross income tax calculation for next year. So you don't have tax that you would have to pay on that forgiven debt like you otherwise generally would have. And again, in essence, it's a grant from the federal government to keep the business going. Another issue on the forgiveness, the amount that can be forgiven is reduced by any reduction in the wages that you're paying employees or the number of employees that you have. The purpose of the act is to keep people employed, and so you don't get the full benefits of forgiveness if you terminate folks or reduce their rates. A couple other last issues on these loans. The term of the loan can be up to 10 years. The interest rate is no more than 4%. And the payments on the loan are deferred for at least 6 months up to 12 months. That's going to depend on the lender and what the lending criteria they may have. All the loans are considered SBA Section 7A loans, so they're treated that way. I reviewed at least one lender's 7A loan application earlier today, and the current applications that the banks use are not going to work for this program because the 7A application is asking all kinds of information that doesn't matter for these loans. These loans do not require a personal guarantee by the owner of the company. They don't require any collateral at all, unlike normal 7A loans. And so that's why the 7A application has all kinds of information about those issues. So I think they're going to have to come up with a streamlined application for these loans. Again, they're specifically non-recourse loans. So the SBA is 100% guaranteeing the loans from the lenders. Because the loans are made directly by the lenders, that's who you apply to. The lenders have full authority to approve the loan, provided you meet the requirements in the act, and then the SBA 100% guarantees them. There's something else I was going to say that I just forgot. Oh, because you have to be able to really track what you use the loans for in order to get that forgiveness, I would strongly advise get a separate bank account. Just go to the bank that you're banking at where your operating account is right now, open a separate checking account that only uses those funds. Then it's really easy to track what those funds were used for. You don't have an issue of commingling with your normal operating funds and then trying to track, okay, what was actually used to pay payroll, that sort of thing. So just set up a separate account, process it through them, and you should be good. So that's kind of the basics about those CARES Act loans. There are a couple of other things that Congress has put in place and or the federal government has put in place that also help small businesses. Some of them come from the CARES Act as well. Some of them come from previous statutes. There previously was put in place what are known as SBA Economic Injury Disaster Loans, or EIDLs. This is a program that when there's an economic disaster, allows businesses to again receive 7A loans from the SBA up to $2 million in value. The loan term can be as long as 30 years. The rate for small businesses is 3.75% fixed. Nonprofits is 2.75%. These loans, again, are normal 7A loans, so they're going to require a personal guarantee by the owner. They're going to require collateral if the loan is over $25,000 in value. Any company that already got an EIDL loan based on the coronavirus, the COVID-19 virus, if you receive that loan after January 1st of this year, those loans can be refinanced into one of the business interruption loans that I just discussed. So potentially they would be a forgivable loan as well if you refinance it through that process. Because the dollar limits are low enough, if you did get one of those sorts of loans already, it's a good idea to try and refinance that. From what I've seen, just in a little bit of looking around today, the economic injury disaster loans have some restrictions on what you can actually use the loans for. Generally is for continuing to operate the business. So paying the payroll expenses, paying the mortgage payments, paying payables, that sort of thing. There seems to be some specific instruction. You cannot use an EIDL loan to refinance an existing loan that's already in place. You could use it to pay some of those loan payments, but to just completely refinance that existing loan may not be an option. Next benefit is obviously the income tax filing deadline has been bumped. So the return deadline to file the returns to pay whatever taxes are owed, federal deadline was extended to July 15th. The state deadline, Idaho state deadline, was extended to June 15th. My understanding is because the Idaho state constitution doesn't allow it to be extended beyond 2 months. That's why they don't match up, but it's still an additional 2 months. So another program that the federal government put in place is these phase 2 loans, which is Family First Coronavirus Response Act. These are, I said loans, they're not really loans. It's a tax break for businesses. If you have employees that have to go on a sick leave, either for themselves or to contact or to care for a family member, or because their schools were closed and they have to be home to take care of their kids, they would get 2 weeks of paid sick leave or up to 3 months of FMLA leave. And the business still pays those employees and then gets a tax benefit of paying those employees. And then speaking of taxes as well, if there's employer payroll taxes that are incurred during 2020, the payment of the employer portion of those payroll taxes, to the extent you're not using the Corona funds to pay for those taxes, you can defer the payment of those taxes and pay 50% in 2021 and 50% in 2022 without any sort of tax penalty. There's also some changes to the net operating loss rules, potentially allowing the net operating losses to be carried back for longer periods of time. And the interest expenses that can be deducted on your taxes are being increased for this year from 30% to 50%. So there's a little bit of tax benefit that they built in as well. Some student loan benefits under the statute and or federal policies. So anybody with federal student loans, the principal and interest is deferred for 6 months. I got on and checked mine this morning, and the interest has already been reset to 0. I think depending on who the servicer is for those loans, if you want the principal deferred for 6 months, you have to actually call and request that. But the interest has already automatically been changed. And one of the things the CARES Act extends is if you're an employer who has like a tuition assistance program, where you're paying tuition for your employees, you can also pay the student loan payments for the employees, and that counts as a pre-tax deduction for the employee, but doesn't qualify as income to the employee, and the employer gets a deduction for those contributions or payments as well. The last bit of the CARES Act really just talks about the bankruptcy impacts. It does change a little bit of the Federal Bankruptcy Act for small businesses. Right now, if a small business files a Chapter 11, there's a procedure where they can do what's called a small business case. Starting earlier this year, Congress had amended the statute to really streamline the process for small businesses, which were businesses with 2.7 million in debt or less. And it makes the process a lot easier, a lot cheaper for those businesses. The CARES Act extended the debt limit for those small business cases, instead of 2.7 million for the next year, small business can have 7.5 million or less in debt and still qualify as a subchapter 5, chapter 11 case, which is a fairly big deal. It basically triples the amount of debt that a company can have and still count as a small business debtor. There's also some changes to the bankruptcy rules related to income for individuals and whether they can qualify as whether the corona related payments that they receive, whether it's the direct payments from the government that are coming or whether it's income that they receive, counts as income that they have to otherwise use in their bankruptcy plans. So that's changing a bit as well. The last thing I had before we open it up for questions was just, right now is a good time as a business owner to kind of sit down and reflect on the business. Is everything lined up the way it should be? Do you have your operating agreements, your partnership agreements? Are they actually written down, or is it just something you've discussed with your partner and that's what our agreement is? Are there contracts that really you need to get updated? Are there employment agreements that need to be updated? Are they still enforceable? I think right now is the time for the small businesses that are in distress to start talking to their bankers, start talking to their attorneys, start talking to their accountants. It's not the time to go out and get a hard money loan because I need cash right now. That's what this CARES Act is supposed to be doing, is getting you the cash right now as quickly as they can. From what I've heard from the bankers I've been speaking with, as well as the Treasury Department this last week, they still have to issue the regulations to the banks on how to process these things. Treasury Department has indicated that should be done by next week. And then the banks, I believe, are essentially splitting these loans into two different categories. There's what they're calling express loans, which is anything for $1 million or less. You will have that loan funded within about 1 or 2 days of the application being submitted. The loans over $1 million, between $1 million and $10 million, they're saying will take about 2 weeks to process. That may be shorter as things move on, but that's what I'm hearing. So at this point, hopefully you've all received that handout. Like I said, we will have this thing recorded and can email that out to you as well later. We do have a couple minutes more if there's some general questions that people want to ask. If you want to voice them or if you want to just put them in on the chat feature. I think TJ's been answering a couple of the questions on the chat feature. The loans have to come from SBA lenders, but the statute, the CARES Act, actually broadens the category of lenders that will qualify as 7A lenders for purposes of these loans. They actually, I think they're even allowing credit unions to issue the loans as well. So that answers one of the questions. Sole proprietor real estate agent can get a loan. The process for them, I think, is exactly the same as it is for any other company. Go talk to your banker, tell them you're a sole proprietor. You're going to need to pull together your tax returns. You have to be able to show what the income was that you received. So it's got to be reportable income because you've got to. That's what they're going to base the loan on. So have tax returns pulled together, business records showing what the benefits were that were paid, that sort of thing. But a sole proprietor qualifies just the same as an LLC or a corporation would. Other questions? Got a couple minutes more.
Can you explain what it would be like for nonprofits, like let's say like hospital districts? I guess they would be quasi-governmental institutes, like canal companies or hospital districts, things like that?
Yeah, so there are specific provisions in the CARES Act for hospitals and hospital type entities, and there's separate provisions for quasi-governmental, state and local governmental entities too. So there's separate funds dedicated for each of those two categories. The process to go through those, they don't have the same sort of streamlined 7A SBA loans like the small businesses do. There's a whole separate fund for each of them. And I honestly didn't read that part of the act yet because it's 800 pages long and I can't read that fast. So, but there are separate funds dedicated to those things. Adding up the payroll costs, if you're trying to calculate how much of the loan you would receive, you're including full-time employees, part-time employees, employees that receive tips. So if you're like a restaurant, I believe you can also include 1099 employees. So really it's almost anyone who's receiving any sort of payroll income or income that's treated as payroll in case of 1099 individual that would go into that calculation.
Matt, this TJ, can you explain how much money a person who's a sole proprietor might be able to get?
So if you're a sole proprietor and let's say you're the only employee that's at the place, you take whatever your payroll was, whatever, I would think if you're a sole proprietor, if you're paying your own individual insurance, you might even be able to include that. But take whatever your payroll was. If it's less than 100,000, then you figure out what your average monthly was, multiply that by 2.5. That's the amount of loan you could get. If it's more than 100,000 over the last year, then you basically take 100,000, multiply that by 2.5, and that's what you would qualify for. So it'd be about 25 grand. I think that's probably the rest of the time that we have. If you've got a regular banker, most of the local banks are going to be able to fund these sorts of loans. So if it's something you're interested in, you can get in touch with them once they have the applications put together. They can send them to you. If it's something you need help with filling out the application, we can help with that as well. There you go. Hopefully you've all enjoyed this. Sign off now. If you've got more questions, feel free to call the firm and we'll get an appointment set up.